computer. Oh boy. Okay. And let's get the red filter off. Okay, welcome everybody to our first futures trading strategies meetup of the year. This is kind of, it's weird. I have a futures trading meetup in Vegas, and then I have just Las Vegas day traders meetup. So this is kind of our future specific meetup that's kind of under the umbrella of the general Las Vegas day traders meetup. So this is our first meeting, and my plan is to basically do this once a month. Either I'll come in and share a strategy, or we'll have other people in the community come up, share what they do, different things that help them. And then if there's nobody willing to present, I've got probably years worth of material and it's not just stuff that's just theoretical, it's stuff I trade every day. So I'll definitely, look forward to coming in and sharing that stuff. What else can I say before we get started here? We do have the Las Vegas Day Traders meetup next week. So next Thursday night around 6, we'll be meeting for the general meetup. And then the week after that is the Traders Expo. So I believe it starts Friday morning of that week, or maybe Thursday, I don't remember now. Maybe it's Thursday, Friday, Saturday. So that following Thursday, exactly a week after our general meetup, will be the Traders Expo. And I'll probably be there every day just to kind of be there, promote myself, and just talk with other traders, maybe watch some of the talks. So I will definitely be there if you want to meet up with me. And I'll put out a meetup for a specific time so that if there's anyone that wants to kind of meet as a group, we can do that. And don't have any other plans. There might be a good speaker. I didn't look at the lineup. So there might be a good speaker, and I could make the event for that time, and we'll all meet and check out what he has to say. So that's kind of what's coming up in the next 2 weeks here. And I think that's basically it. So this future strategy meetup is for future specific traders to share their knowledge with each other, kind of like a mastermind, if you will. And it'll help newer traders kind of get an idea of how some of us veteran traders are kind of navigating the markets. So today I'm going to share my strategy. I trade on the S&P 500. That's all I trade. If the market isn't giving me what I want, or it's slow and sideways, low volume, I just won't trade. And that's just how it is. I'll turn the charts off and come back the next day. I do run a trading room every morning, so I have to be on the market for about 2 hours every morning, regardless of whether or not I personally want to be trading. And some of these days, like for the last week, there's been some funky stuff, a lot of 40-50 point pushes in the S&P, and then 40-50 point push back down, and then another push up, and you end up navigating over 200 points in a few hours up and down. So it's been a little funky, but yeah, so let's get into it. I want to share, basically I have it broken down into 5 sections. First section is what time frames am I trading, and how am I using those time frames to give me a little bit of an edge. Second part will be what indicators I use. I really only use RVI, which is a derivative of RSI. It's basically the same thing. Don't read too much into what it's actually doing. I just use it for divergence. And again, you could use anything, cumulative delta, MACD, you could compare a different market, whatever it is. But divergence is a big thing for me for trade entries. And then we'll get into it, higher timeframes for some other things. And then on my tick chart, I have a VWAP and a 200 moving average, and that we'll get into. It's pretty awesome stuff. Then I want to talk about the levels that I rely on to place trades. And then we'll just get into a trade setup or two. And maybe I'll mention some of the multiple time frame divergence stuff that I do. And that's it. So let's get started here. Let's close this out. I'm going to close my video because I don't think you need to. I hate having people staring at my face. It's just how I am. So I'm going to close this out and we'll start. So if I could, and hopefully everybody can see my screen. Should see 4 charts. Okay. All right, so let's take a look at it here. This is my general this is what I'm looking at every morning and what I'm trading from. I do have other charts. I have 5 screens here. So there's, a daily, a 4-hour, a 60-minute, and then on this left-hand side, I can toggle between a 10 and a 30. In fact, I could probably toggle all of them in there, but so that's what I'm looking at every morning. My 10-minute here on the left and my 3-minute up top here are more so for getting me a setup, and then the 1-minute and the 512 or for like pinpointing really good entry. I'm big on, this 512 tick chart. This is where you can see my 2 moving averages, 2 indicators. And this is what I'm using to get in the market and basically get trades with less than a point of risk. And people think I'm crazy. And it doesn't matter what market I'm in. If my levels work, they work basically to the tick or within less than 2 points. If they don't work, then that's okay. But that's basically what I'm using here. And let's go ahead and so 512 and 1 minute are for the very specific entry itself, right? So when I get some good confluence on that 3-minute and say we're pushing up into a level, I'll then come down into the 1-minute chart here, looking for some type of very local divergence to go ahead and pull the trigger. And sometimes it's the 1 minute, more so it's the 512. And if I have agreement between both charts and both timeframes, that's like icing on the cake for the trade. Again, the 10-minute over here is just kind of for a larger picture. And I will look at specific divergence setups on the 10-minute chart to help orient myself for a move. But more so, it's just there to give me a bigger perspective as I'm trading down here on the 3 shorter time frames. Let me close that over there. So those are the main time frames. And then I jump up for a larger kind of perspective before I actually start trading in the morning. I jump up, I have my 60-minute chart here, and then I have a 4-hour and a daily. And so those are really the main time frames. When I go up to the weekly, the monthly, and the quarterly or the 3-month chart, this is just giving me that kind of the major perspective, right? And for the last few days here, or the last week or two, we've been pulling back, and these higher time frames are all showing a lot of bearish clues. The weekly is the first time frame back 2 weeks ago that gave us that first clue. Once this closed here on January 28th, coming into that first week of February, that could be the start of a potential reversal there. And so that is what was kind of giving me some bullish bias coming into last week. And then obviously we petered out right off our expected resistance zone up top here. So this area that we failed from was basically our expected resistance zone. In my trading system, in my trade group, we highlighted right here, basically 45.75 to 45.85, maybe 45.70, 45.80 area. That was what we expected to be trouble for any type of breakout out of that first chop week that we got into. So not too surprising that we pushed up into there. And I'm just looking here on the higher time frames to look at the larger structures in the market. So I'm going to get into levels, but the proprietary levels that I put out, and you guys are basically going to see them. So you're welcome to steal them if you want. They are going to change though. When the new contract, when this March contract closed, we're going into the June and we'll have all new levels because the whole market is going to shift, right? But I build my own proprietary levels based on larger structures in the market in areas that I would consider maybe consolidation zones. Some people might call them balance areas, basically the areas where the market chops back and forth in areas. And then after they break out of those areas, they typically will then use them as support and resistance. So I've got all those levels mapped out in the market. And then you can see the general structure zones here where the market is typically finding that major support and resistance. So on my 60-minute here, I've delineated every major level, in my opinion, that's going to be relevant in the future. And all these levels down here that you see, 42.13, 42.40, 42.62, all this stuff was on the chart before we even pulled back into here. So as we pull back, I just want to show you guys, again, just looking at previous structure in the market, these levels were here, and just look at this. I mean, comes back, pulls back, holds the level to the tick, breaks through, pulls back, holds this level to the tick, breaks up, comes up, pulls back, actually holds that level almost to the tick, bounces out, comes down right into that one, continues going, eventually comes back, holds this one, continues to go, comes right to the back end of this one up here, fails from here, comes down, bounces. So as you can see, the lines, there's no question, are extremely relevant. And so I plot these out when the new contract opens, again, based on all the previous price action. And then it just seems like every day they become relevant levels. We came right up into 47.97, couldn't really get through it for a while, peaked above to that 08 area, started failing, and then we're basically coming up to the back end of these levels and failing. Now, it's obviously not clean and all that, but yeah. So I'm using the higher time frames to zoom out, see the larger picture, plot some of these levels, and then all those levels you're now going to see down on the short time frame charts, right? So you'll see those blue lines, the light blue lines, are the major areas of structure. And you just go back and you look at the market, it just, I mean, they work so well that I probably should not be giving any of this out for free. But yeah, just amazing stuff. So I've got all those levels that I build up, and those are my proprietary levels that I come up with. In addition to that, I also have another set of proprietary levels that I get through the company that I run the trade room for. So run the trade room on the Day Trade Like a Pro server, and they have this thing called prediction points. I'm not trying to sell anything here. It's just what I use. So they have proprietary levels, again, based on specific structures in the market. They are given out at the Globex Open. So they're valid for all of Globex and then into the next day. And then at the end of the day, there's a new set that are given out. For my levels, they're basically static. They're always there and they always freaking work. And then, so these are, every morning they're going to be different. And they also help me for trade entries, because if you see a lot of these blue lines, these lighter blue lines that aren't dashed, are the major CP levels. And as you can see, they a lot of times will then use these as really strong support and really strong resistance as well. So I'm using the prediction points, which is what they're called. I'm using my personal proprietary levels. And then I like to use fibs to, measure legs and look for potential support and resistance. In fact, how many times do we see the market pull back, hold the 30, pull back, hold the 50, pull back, pull the 60, and go ahead and extend out right into one of the extensions? And I could sit here probably for hours and just go through leg after leg and show you examples where it holds these levels and then pushes out to the extensions almost to the tick. Sometimes it's almost like it's, there's somebody in the background controlling the whole thing, because it's just unbelievable. So I've used fibs to orient myself in specific legs. If certain fib levels end up lining up with specific structures in the market, and sometimes they line up with my eye levels, that's what they're called, interesting or important levels. So I've got the eye levels. The major ones, remember, are showing you, if you zoom out to a higher time frame, the major areas where we find that, consolidation or, structure is what I call it. And then I have minor levels, which are kind of the smaller ones in between. So you might have some major stuff going on where the market's kind of doing stuff in here, coming down, going up. And then there's always these little levels in between that always seem to be relevant within that chop area. And so I go through and I kind of mark all the minor levels in between the major areas of structure. So I have the minor levels and the major levels. I have the two prediction points, which are the blue and the yellow dotted line. And then a fibs, basically. So when fibs and all this stuff starts to line up, here's a beautiful, beautiful example of this leg down. From down here to here, the 50% retracement lined up exactly with my eye level. And then what do you know? I mean, here's a trade setup I didn't even have planned. a nice bearish divergence on our tick chart right at the level. So there's a beautiful trade setup. And again, we're in a pretty bearish market here. So looking for a sell off the 50% with a nice signal and our eye level sitting right there. And there's a money shot right there, right? So those are the levels I'm looking at. And so let me just look at my notes here. So major and minor eye levels. We have just the proprietary prediction points that come from the company that I run the trade room for. I look at the fibs. And there's one final thing. And I know it seems like it's a lot, but remember, I'm usually down here on a tick chart looking to get in on a setup. And so, you know, these levels, even though there's a lot of them, a lot of times you have room, and then it's just narrowing down little areas in the market that you want to pay attention to for the entry, right? There's one final set of levels that I look at, and that is the daily power levels. So let me see if I can pull up a larger perspective here so we can see. So here is today's price action, right? We made the high up there at 83.75 in the overnight session. We tried to bounce up and break through. That right there this morning was a really good clue that we weren't going to break out, in my opinion. We pushed up, we tried to come and test the high of the overnight session there, or maybe it wasn't the high of the overnight session, that was. But basically come up and test that and potentially break through. They came right in front of it, just shy of the high, and started violently selling off. So that was my clue this morning to start selling the market, in addition to some other things. But again, I digress. So we've got the high of the day before, we've got the low of the day before, and then we've got 50% of it in magenta. So the red line, the green line, and the magenta line are my power levels. And then I have one last line here. I'm not going to tell you how I derive it. It's a little proprietary, although I have told people in the past. So there's a proprietary orange line right there. That level is absolutely magic. If you go back pretty much every day and look at that proprietary level, it's like the market knows it's there and uses it every single day for all different kinds of setups. So as I go back here, and remember, it's been sideways and choppy like a mofo here for a few days, but there's the orange line for this day. And again, I mean, it was a horrible price action, but you can see that even the line itself that's plotted for that day, if you plot it back in the past, it also ends up becoming a pretty powerful support and resistance level. And some days it doesn't work at all. But I mean, for the most part, and I'm talking way more often than not, this level is just an absolutely beautiful trade. If you're coming up to it from the bottom end, beautiful sell. Coming into it from the top end, a beautiful buy. So those are my daily power levels. Again, just basic high, low, 50% of the day. It's incorporating Globex and everything. I don't separate out regular trading hours and extended trading hours. I'm always looking at everything. So that's the power levels. And then what else did I skip here? The indicators themselves. So let me just really quickly review what I'm looking at here on RVI. So the bottom of the chart on basically every chart, the only chart that it doesn't have an RVI indicator on is my yearly chart. And that's because NinjaTrader doesn't have enough data to go back past 2009, and it won't even plot RVI because there's not enough data on the chart. So that's my main indicator. It's basically, if you guys remember to our monthly meeting, Jason, he was the one that gave me a chart with a tick with the 200 moving average on it, with the divergence. I don't remember. Yeah, it was RVI, I believe. And so I just started looking at this, what was it, a little over 4 years ago when I got into the S&P, and it just became something that caught my eye almost in every. I remember sitting with Jason. I don't know if he's in here right now. In fact, I don't even think he RSVP'd. I remember sitting with him and he'd be like, oh, you know, I think the market's going to be going. I'm like, no, the market's going to pull back. And he's like, no, it's probably going, and bam, it would pull back. And it's all because I just kept seeing all these divergent setups and actually seeing follow through. So the RVI is, I got that again from Jason sharing that with me. And I'm really just using it for divergence. There's all these different theories about the range. In fact, I should go over that really quickly. And so let's just expand this out and take a look at the RVI. So it's pretty much the same thing as RSI. And I trade this according to, I don't even know who came up with it. There are 2 or 3 market analysts, technician guys, pretty well known, that advocate for this. And I believe I originally learned it from Andrew Cardwell. Andrew Cardwell is like, they call him the doctor of RSI. And, you know, he claims that RSI is the only indicator you need because it tells you trend. It gives you price forecasting. So based on the differences between the heights of a divergence, he claims you can then calculate how far the market's going to move in the direction of the divergence. He gives you entries, all this kind of stuff. Again, I'm just really using it for divergence. And so these lines you see here on the RVI, you see a red line, a green line, and then our standard 80-20. Anyone who's been in trading for a few months should already know the 80-20. But basically the argument here from Andrew Cardwell and from a few other market technicians is if you hold above 40 on your RVI or RSI, remember Andrew Cardwell is RSI and everyone else is. I'm the oddball using RVI, and that's only because I've been using it since I started looking at the S&P and have not, never looked back from it. So rather than moving to RSI just because it's the most common one, I just stuck with what I knew. So the argument here for RSI and for, I think actually all oscillators, now that I think about it, is that if the market holds above 40 and plays around between 40 and 80, and again, getting up into 90 and 100, that is a bull market. When the market starts to break below 40 and start to trade down and hold below the 60 and trade around 60-20, and again, there's always going to be those extremes down, that is your bear zone. So I have a red line there showing you bear zone below there, and then the green line bull zone above that. And another argument is that even if the market is, let's see if I can go up, you should see what it looks like on the high time frames. It's actually pretty unbelievable. So if we go back to like, so here's our quarterly chart, our 3-month chart. And for some reason, the drawings, I don't know if anyone else notices this with NinjaTrader. Sometimes I have drawings on these higher time frame charts, and then I come back and they're like moved, like someone manually moved them. I don't know what's up with that. But on the 3-month here, look at the RSI. Let's pull this up. It's never been before below 70. It basically hangs out above 80. And this is for what's this, 2010 back here, 2009, all the way to now. And this 3-month chart has never been below 70. Pretty insane stuff. But I wanted to just point out that being up at 90, being up close to 100 is not an overbought signal. So I have kind of a different perspective on overbought and oversold. And again, these are concepts going back to Cardwell and Connie Brown and a couple other people. I don't consider when we're up here at 80 or 90 on RVI or RSI that the market is going to sell off. This is an indication to me and to anyone else looking at this interpretation as strength, very strong market. If you get a divergence, that might give you an indication of exhaustion in the move. But just because you're above 80 and you're up in this 80 to 100 range doesn't mean the market is weak or it's overbought. So I don't believe in that. Same thing on the bottom end. If the market's down at 0 through 20 here, doesn't mean it's time to buy the market. In fact, and that's the thing, it's actually the opposite. If we're up here on our higher time frames, the monthly, and let's just look at it real quick. Monthly, we're way above the 80. Weekly, again, looking at that weekly, we are holding up, basically holding 60 and playing above 60 and 80 for years and years. The only time it drops below the 60 is when we have those major sell-offs. Remember 2018, October of 2018, major sell-off. And then remember COVID, major sell-off. That's the only time we've really ever been below 60 on the weekly, right? So pretty crazy stuff. So when we're up here above the 60, up above the 80, I'm not thinking it's time to sell. I'm actually thinking it's time to buy. I might want to look for a pullback to find an entry to continue going with the move. So hopefully that makes a little bit of sense. And outside of that, outside of those range rules, that's basically it. I mean, that's my trading system in a nutshell. Now, we could get into a lot of specifics, and I'm sure there are a million questions. And let me just take a look here. I'll finish out. We have plenty of time. I just want to cover the concept of multiple time frame divergence. So I want to show you something. The daily is a beautiful time frame to look at divergence and to give you a clue for potential major reversals in the market. Now, most of you, if you're experienced traders, you know that there's nothing that works 100% of the time. And you know that there are a lot of great setups and signals that don't get the follow through, right? So you might have a bearish, really strong bearish signal. It does pull back a little bit, but there's just no strength. And then they just keep on going. So that's something you can't rule out. That's always going to be there. But what I want to show you here is a couple things. So back in September, and I don't think we were on this contract, but it was basically the same setup. Back in September, we got a clue on the daily back, let's say September 3rd, that there was a bearish divergence on the daily chart. That was a clue, just looking at this time frame, that there could be a potential pullback from there. Remember, well, actually, this is something I didn't mention about divergence. Just because you have a bearish divergence in a bullish push does not mean the market is going to go ahead and reverse for a major reversal. It's just telling you that there's exhaustion in the current push. And so there might be some type of correction or minor pullback to build up that, take that in breath to blow back out and continue to push, right? So I saw this here. It was a consideration. And then, of course, from there, you get this major pullback. And so a lot of times, here's an attempt to bounce back out and come up and retrace and go ahead and break those highs. We came up here, and on this September 27th, or I'm sorry, the 28th, right? Because we're looking back to the previous candle. On the 28th, we saw this here. It was very clear. In fact, the end of the day, when we opened here on the Globex session around 44.20, that was there clear as day, right? So we saw the curve. Basically, it was curving as this opened. If we go down to the 4-hour, and we go back to September as well, there was also bearish divergence up there. Remember, we said what, September 3rd, and there's actually a bunch of little divergences here. We have one right there on September 3rd. And then they tried to peak above, and we got another failure from there, another bearish divergence. So up on the highs here, our 4-hour back on, let's go to September 3rd here. September 3rd, this high right here gave us a bearish divergence. In fact, the bearish divergence was right here in the middle of the night, or yeah, that closed right around midnight my time. So right in the middle of the night, a bearish signal. Look at what happened here just around the open. We peaked above it and then failed. And this peak above and fail, or peak below and bounce, is something that I'm sure all of you are familiar with. You have a beautiful signal, you get in short, the market comes down, it bounces up, goes right past your entry for a few points or a few ticks sometimes, and then bam, goes exactly where you expected it to. So that's kind of what happened here going into the open that morning. But again, I'm just telling you, as we were building up our case in our pre-market session, we would have seen the 4-hour and the daily showing a nice clean bearish divergence, which would have given us a bias for the future days there, right? And I just want to show you that eventually what happened was it did pull back. And if we go back to the hourly chart and go back to September 3rd here, and I actually didn't prepare this, so I don't know if we got the confluence. September 3rd came right into here. And then at the open, I guess, let me see. We actually got a local divergence right in there. And then that push right out of the open was pretty clear. Push up to that high at, what was it, 32.75. RVI was way down here despite that higher high. And that's the way I interpret it. I know that the argument is you have to look at the close of the candle, but the way I've been interpreting divergence for 3 or 4 years now seems to work for me. So I'm sticking with it. So confluence between your daily, your 4-hour, and your 60-minute is going to lead to pretty big turns in the market. And just going back here to recently, we actually called this back on February 3rd, the morning of February 3rd. Now, we were probably pretty far away by the time we did our pre-market, but just want to show you, first of all, the level that we expected to hold here was 72. And we said there's a kind of a range between 72 and 80, because 80 was exactly the 61.8 to the tick. So we came up right into it. In fact, on that day, we pushed into 72.75. We got a pullback, and then eventually it chugged up and went to 86. Again, a peak above our expected resistance level. And we failed from there. And when I looked at the end of the day, on whatever day this was, I don't remember now, I told everybody there's a really clear potential bearish divergence here. And I think actually on the morning of February 2nd, it's all in record. I have everything recorded so I can go back. On the morning of February 2nd, we would have been looking at the fact that we pushed down from the last major swing high down to here, and the RVI was obviously much higher. So going into the morning there on February 2nd, even though this candle wasn't closed, we had a potential indication of potential divergence going into the open there. So we had it on the daily, we had it on the 4-hour. Let's go back to this local time frame. We had it on the 4-hour up here. We had it on the hourly. Let's go forward. Right up here. So right at the high, there's that 78.75. I told you we pushed right into our eye level at 78.75, and we got a sell-off. So it was like what, 78 down to 34. So pretty nice push. Came back up. There's the peak above. And so both touches, the touch of 78.75 just before the open was bearish. And then that peak above just after the open, or actually at the end of the day, we got another bearish divergence. But the key thing here is we saw the bearish divergence when we were doing our pre-market analysis. So back here, that little touch of 78.75 on this candle that closed at 5 a.m. gave us a bearish divergence. So going into that morning, we had 60-minute, we had 4-hour, and we had daily clear potential bearish signals. And that's what helped orient us that morning. And we did end up selling. Now that I'm recollecting that morning, we were basically sellers all morning. And then we only trade until 8 a.m. So we captured some of the sells here down to the low. And then it looks like, I guess, after my trading session, we peaked a little bit lower, came up, tried to break through that high, and then got another bearish divergence, and the sell-off began, right? So that's how I'm using multiple time frames. I'm starting up at my higher time frame. Sometimes even the weekly or the monthly will have a divergence like we did before the sell-off. In fact, before the sell-off, our higher time frames were already telling us there's some wonkiness going on. We might not have a full reversal, but there's definitely an expectation of some type of pullback. And this was back in December of this year. So going into January, getting the sell-off was an expectation. And in my trade room, we were talking about it for about a month or two. So going into November and going into December, there were all of these bearish divergences setting up. You can see it here on the monthly on this November candle that closed. When we started seeing all that, and especially, you can even see the, see if I can remember this. You can see that candle right there, huge wick. So we had this wick and a bearish divergence on a monthly chart, I mean, huge time frame. So we were already kind of cluing into that and kind of expecting maybe a pullback. And then it took a little bit of time, right? So we played around, we peaked up just a little higher. Remember, we got up to 48.08, and then that was it. the whole bottom dropped out. I mean, look at that monthly bar, bearish engulfing, closing at the lows, you know, not looking great. So that's how I'm doing it, guys. That's my trading system in a nutshell. No secrets. Of course, like I said before we started here, most of my trades are break even because I'm looking to get in on very limited risk for a turn off of one of these levels. And sometimes I will catch it and we'll get some type of really nice move. And like I said, I'll be able to, I put typically anywhere from 2 to 5 contracts on, and I take some off around 5, some off around 10, some off around 15. And so I scale out wherever it makes sense. And that's not always static. It's going to be based on expected support and resistance going into the future. So for example, down here, let's say I took a long off 74.50, maybe there was a signal and I had some type of something that told me I wanted to buy here because I expected some push higher. And theoretically, if I took 74.50 here, my first target would be just in front of VWAP. And the reason is because VWAP acts as a really strong resistance level. And it's not perfect. Some days it doesn't work at all. But for the most part, if you zoom out and look at how the market reacts off of VWAP, why is it not plotting back here? Oh, it's because it's so high. Like, where the hell's the VWAP here? I guess this wasn't a good example because we were just in a very strong downtrend. But this VWAP, I'm telling you, it comes right up into it, fails, it gets above it, pulls back, bounces right off of it. So if I'm long from 74.50, the last thing I want to do is be in with a bunch of contracts, have them come up right into VWAP, get a failure, and have it come back to my entry. So I do like to take some off, assuming I have at least 5 points to the upside. So 74.50, 79.50 is right here. I have a little bit of room to take some profit right up in front of VWAP, and then I'd take them off probably up around the 200. And then in this example, I mean, probably not the most beautiful area of the chart to be buying right here, but then I'd probably be taking profit up around the CP. And that's just because we don't know what's going to happen next. You could even have there's some times where I have like a huge confluence of a million things. It's like the stars align times 1,000, and then nothing happens and it doesn't work. So even though you might think that, that you know where the market's going, you don't know if it's going to come up into one of the levels, especially with how well the levels that I use, it's going to come right into a level, hold it and go. And so I like to take profit, and I take trades only when I know there's at least 5 points to my first profit target. If I know that my first profit target isn't going to get to 5 points, I'm not even interested in taking the trade. Sometimes, full disclosure, I mean, it's not like every trade is the same. I'm sure you guys understand this. As a discretionary trader, it's not like every trade is the exact same thing. Depending on what the market's doing, depending on context, depending on P&L, if I get 2 big trades off, the last thing I want to do is cut myself up with 3 or 4 losses at the end of the day and cut into my P&L. So sometimes I'll go ahead and drop down to 1 or 2 contracts. So I already built 30, 40, 50 points for the day. Why give it all away, right? So I'll just go in with 1 futures contract, 1 ES contract, and just scalp 5 points at a time. And a lot of times those trades are, again, pushes for 2 or 3 points, and then it comes back and gets me a break even. Happens all the time. But I mean, the name of the game, in my opinion, is getting those big winning trades. If you can mitigate your losses and make sure you're not losing money, you're not losing all the money you're making, that's the name of the game. So I'm going break even pretty quickly on most trades. Again, my stop is never more than 2 points. And a lot of times, if I get an entry off a level and it bounces to the tick or within a few ticks and goes, my stop ends up being 2 or 3 ticks from the low, or it's up right up to break even as it gets a couple points in my favor. So my losses are really small. I have a bunch of small losers, break evens, and small winners, little 5 point, 4 point winners, and then those big ass 30, 40, 50 point trades. And that's how I found success as a trader. I used to scalp divergent setups on a tick chart and take it for 1 or 2 points. Didn't really work out because my P&L was constantly kind of coming up, coming down, coming up, coming down. With this new way of trading that has, I found, worked for me, basically what I see is, okay, one good trade, okay, loser, break even. I mean, there's commissions, right? So break even, loser, loser, break even, bam, winning trade. Okay, loser, loser, break even. And again, a break even is going to be these slight little falls. Loser, 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 winning trade, bam, I'm back up, right? Losing trade, break even, losing trade, big winner, losing trade, big winner, right? That's what it's all about. Getting your trade off and letting it run and letting yourself capture a big part of the move. That is going to make the difference. At least I know for myself, that's what made the difference in my trading. So if I could get a winner that's equal to 6 or 7 losers, and sometimes the winner is equal to 10 losers, then I can sit here and I can get cut up a little bit. I can take some small losers. I can take my break evens. And then when I capture that low, that really starts to take off, that's where I'm making my money. So I think that's basically it. I didn't want to get too specific or into super detailed stuff because we would be sitting here for hours and I would look at the clock and realize it's 8:30 and I didn't even eat dinner. So we have plenty of time here. It's only 6:45. So if anyone has questions or anything else, welcome to ask away here. It doesn't seem like anyone's really talking. Can everybody hear me? Chat. Oh, perfect. So I guess there are questions. I don't hear anything, so I'm hoping that, okay, just check the chat. All right, let me expand the chat out here and take a look at what's been said. So Wes, go ahead. Ask away. Oh, let's grant the security. I have it so that you can unmute yourself. It's not checked. Oh, okay, I got it. There you go.
There it is. Yeah.
All right, what's going on?
No, I went for the other
Hey.
guy. Can you hear me?
Hey, what's going on? Is this Wes?
Yeah. How's it
Hey, what's
going,
up?
man? First time here. So it's great to meet you guys. Thank you for doing this.
Oh, for sure.
Appreciate everything you're doing.
Definitely.
I'm a spoof fighter. So I can really relate to what you're describing here. So in general, I would say it's great what you're showing. So I don't know how everyone is here, if they're new or super advanced, or if it's their first time looking at a chart, but I love what you're describing as far as levels are concerned. That to me makes sense. I do fall into the camp of preferring auction market theory over traditional and classical TA.
Okay.
Um,
So you're
been
looking
doing
more at the buying and selling.
like volume profile, market
Auction.
profile. Like James Dalton, Jim Dalton, he's
Mhm.
my source of inspiration for at least what I've found that works for me. But I appreciate anyone who has a system that works for them. And I really like how you got into the risk management, because that piece probably to me was the highest value item that you've provided tonight. And I really like how you described your style and how that works for you. And I basically have the same style, so it's
Okay.
right up my alley.
Awesome.
But the questions I do have from like an order flow or like refining your entries perspective, because you're a little tighter than I like to keep my risk, and I do change it depending on sort of what are the average rotations, right? As someone mentioned, it is kind of fractal in nature, right? So if
Yeah.
let's say it's 5 or 6 point average rotation, right? Whether it's trending up or down, I don't really pay attention to. It's just I know that there's noise within that 6 point range, right? So I find it quite interesting that you're able to stay so tight. I guess you probably take more flat, or a couple ticks, or like nothing. You're taking more losses probably than I do. And so do you use like the DOM? Do you get into tracking like on a footprint, like a 5-minute or like a rotational based footprint, like a point and figure chart, depending on how you want to call it, to really dial in like a precision of, like you said, like a couple ticks basically, because I find that fascinating for the ES, at least, especially in the last, couple months.
Yeah, with the ranges.
Yeah.
Yeah, well, I am aware of auction theory. I'm aware of market profile, volume profile concepts, but I never really got into it. So no, I do not use order flow at all. I put orders in on my dome, and but I'm not looking at how many orders are at each level or anything like that.
So you're not monitoring, let's say, like the cumulative delta and
Nope.
tracking kind of positioning. Yeah, okay. No, that's
Yeah,
fine.
no. Yeah.
Obviously it works for you. I thought I just had an appreciation for that type of risk management because
Yeah.
I've tried it. It never worked for me. I'll
Well,
probably go a couple points offside and not really, think too much of it, but a couple
mhm.
ticks I could never get there.
Can I show you why I don't need to take more than 2 points of risk?
Mhm.
Let me show you why. I want you to look at basically my minor eye levels, the light blue dotted ones, and then the light blue dotted that has the actual label on it. If this level is going to work, they're typically not going to break it by more than 2 points. And so basically when I put a trade on, I mean, this is a beautiful example of a nice healthy retracement right to our eye level and right to the VWAP. And so if I put my entry in at 54, the low there was 52.50. What's the actual low? 52.50, right?
Mhm.
So my theory is that if my level is not going to work, then I'll just, I'll take the stop. Or, again, if it balances out, I'm already managing that trade pretty tightly. So that if the trade's going to use a level and go, it's going to use the level and go. I'm not interested in sitting there and waiting for pulling back and getting another setup. I want to see it go into a level and pull back, and that's it.
Mhm.
And that's what it does. I mean, came right into the prediction point this morning, bounced out, right? There was no test, there was no breakthrough. And so I'm just relying on how well the level works. VWAP. If the VWAP's going to hold and pull back, typically on this chart, it holds with less than 2 points and pulls back. Now, if it pulls back with a shallow 1.5, 2.5 point pullback and then starts coming back, I'm already considering, do I even want to stay in the trade anymore? Right. And here's a great example of a nice push out. And I don't know if this was from today, right out of the open, out at 6:30. We pulled back right to the eye level, which everyone that's in my trade room knows we're calling the trades off these levels. It came down to 39.75, and that level there is 40.75. So it broke it by a point, and then it started going in the direction we would have wanted it to go. So I don't see the point in putting on 2, 3, or 3, 4, 5 points of risk. Now I understand that a lot of times I get stopped at break even or whatever, and then it ends up going, and that's frustrating. But again, I just wait for another trade setup, and it's eventually going to come into a level. It's going to hit it, and it's going to go again either to the tick or less than a point. And it just happens over and over again. Here's a hold of the KP. Here's a hold of the eye level. Now it's not perfect, and that's where risk management comes in, right? So
Mhm.
I could take 2 or 3 major stop outs. In fact, I could take 5 catastrophic stops. My catastrophic stop is 2 points. I could take 5 in a row and then 1 winning trade, and I'm back to way, way in the green, right? So I'm not too concerned about getting stopped out. I just, it is frustrating when sometimes it comes up 2.5 points, stops me at 2, and then goes. So I understand. I track the trades. I have the statistics. I know the potential maximum adverse excursion of every trade I go in. And yeah, if I widened it out to maybe 3 points, I might capture more trades, but then it starts fucking with my psychology. When I start getting 3.5 point stops with 5 contracts on, and then I go ahead and get a couple of those, it's a lot different than just taking a 2-point stop and then some smaller stops and some break evens.
So I find that interesting. I'm kind of the opposite.
Well, you'd
Because if
rather put a
I,
little more risk because you know that the probabilities are in your favor, I'm guessing.
yeah, and
Well,
if I hit it 3 times, like my confidence drops to near zero after three
okay,
times. Like I can't
yeah.
hit it 4, 5, 6 times, and that's probably something I have to work on.
Mhm.
But I find that interesting that it's kind of the opposite.
Yeah. Well, we're always looking for improvement. So, I mean, who knows? I could eventually maybe widen my stop, but it's just, for me, it's more psychological than anything. Even though the numbers tell me, I still have a problem accepting the risk.
Hmm.
And so for me, just to keep that psychological capital going, that's all I really can handle. Now, like I said, we're always growing, we're always learning. Who knows, maybe in a year from now, I decided I'm a total idiot for only leaving 2 points of risk. If I just left 3.5, I would win 5 times more trades, right? So, maybe that's something I need to consider. But again, I know my levels and I know they work. Here's an example during our meeting here, right to 74.50. Actually tested it multiple times, didn't break through and bounced. And this is a level based off of, again, the larger structures when you zoom out to the bigger time frames. Here's another beautiful example. We break through 45.27, basically the next major level. We come right into the back of it and fail. And there's even a pretty nice little area of that structure that it basically rejected from. So, I mean, I don't feel like it's necessary, but I do agree my win rate would go up significantly if I just accepted a little bit more risk. So it's just, that's a psychological problem I have to work through.
Yeah. Is it okay if I ask one more question, or do you kind of pass the mic?
Oh, I mean, I don't mind being here for another maybe half hour, so we have time.
I'll just ask one thing about sort of where we're at after this crazy day, because um, the way I've read today, and it kind of goes back to auction theory,
Mhm.
is being short overnight is the right trade. I see an unfinished auction. I see that from a weekly value perspective and a monthly time frame.
Okay.
Um, where the most volume has been done in the last week or in the last month, it's just around, just below or above the 4,500. And so coming down today, and it's an auction theory thing, it's those high volume nodes should act as a magnet. And
Uh-huh.
when they don't, that's another piece of information. So essentially, by the close and from the close to now, like we're not really doing much two-way trade. We're still kind of holding below that, accepting lower prices, and we still have an unfinished auction. So when I get a read
Where
on
did you say the unfinished auction is? Above 4,500?
44.70, we would call it a poor low, or an unfinished auction in this case. I could share my screen, and I don't know if you guys do that. I'm
Let me
curious what.
let me person share. Okay, you should be able to share it. 1 second. Stop share. Okay. Yeah, so you should be able to go up in the meeting and share.
I see
Yeah,
your
Brian, you're
screen.
probably right about that. Since I started out scalping for like a point or two, that might be,
So
a
it says
crutch.
host disabled screen sharing.
Oh, Jesus
Um,
Christ.
and
Let
it's
me
fine. Like it's
enable it. I don't know why I disabled it. It might have just been checked. Um, where was that? Where was that box? Allow parties to share screen. Okay, should be good.
there we go. So let me know if you guys can see what's going on.
Perfect.
So I'm a huge fan of Sierra. I think it's the best. But yeah, you can get profile charts like this, similar, but the reason I love Sierra is because on the right side, I can have my weekly, my monthly, and my yearly volume
Oh, cool.
profiles that are
Nice.
shaded in terms of value, which is the 70% of where most of the trade has happened. So these lighter grays, if that you can see that there's like a darker gray,
Yep.
that'd be like above weekly value. So this is your value area high, this is your value area low, and the
Okay.
same applies for all time frames. So
Point of
here's
control
the,
there.
yeah, VPOCs almost the same on these time monthly and weeklies. So I look at structure from like a perspective of structural repair as auction theory describes it.
Oh, yes.
So
Okay. I just want to say real quick, my definition of structure is just something I came up with. So it's
you're
not
doing
based
levels, which,
on a theoretical or already established term, I guess.
yeah, no, there's different things you could say for structure, and
Yeah.
I agreed with everything you talked about as far as structure is concerned.
Mhm.
The top-down approach, having your higher time frame levels transcend into your lower time frame charts, like I have all that. I
Yeah.
love it.
Yeah.
It's a huge important thing.
Yeah. Yeah.
But going back to this here is the auction's one time framing down. Even going into the overnight, if we kind of split the day up, this is a one time framing auction. Sellers all day, basically, except for the little bit on the open. But
Mhm.
um, if we look at where we are here, when we compress the profile, like this is considered a poor low. And so you can say, yes, there's a buyer here, there is support here for
Mhm.
now, but this is considered like an unfinished auction. And the fact
Gotcha.
that we're not trading up here, doing two-way trade, because historically this is where two-way trade would occur. We've kind of ignored the magnet. We've pushed through the magnetic force. And so where do we land? Well, you're looking at high volume nodes or structure below. And so to me, this is actually quite an exciting short, even though I was getting pretty messed up trying to fade this all day.
Mhm.
I've flipped coming into the start of the evening session. So um, I look at this as far as from stops accumulating, this is where a lot of stops are going to be. So a really hardcore flush down to clean this up. Like I see that happening all the time. So obviously more common in other markets, depending on what markets you look at. But
Mhm.
where's the highest volume after we get here? It's kind of in this area, but fundamentally down here is really where the next high volume node is. So I just I am an intraday swing trader, but I
Okay.
always try and think what's going on overall, broader time frames, and what is the auction telling me. So
Right. Yeah.
I know there's a lot of argument to say you should be getting long here, and obviously I could be totally wrong. I was just curious if anyone kind of sort of saw what I see. Um,
Yeah.
but
Anyone
yeah,
else out that follows market profile or volume profile?
I have a friend in Texas that uses those hero charts. Yeah. As far as I know, it's one of the big platforms that future traders use, and he uses that as well. But
so the footprint's great,
I
right? Because
don't.
you're tracking delta, like cumulative deltas through the day session or through a certain time period. So I can see how many contracts are trading, and the colors kind of help me understand, is there a passive bid or is it, something else? So that's just when I was asking you about how do you refine your entries, right? Like this to me is super helpful, but um,
Yeah, yeah, I agree on the footprint. It's something that, caught my attention and I never really got into it just because with trading, it's like you start to get into something and then you're like, oh, look at all that. I want to learn all that, right? And everyone's telling
yeah.
you, don't start going into other stuff, become a master at that first, and then you can start moving into other things, right? So that's kind of was my plan was master this strategy I've been kind of piecing together for a few years, and then maybe start getting into this stuff, which is exactly what you're doing. So I might have to link up with you and learn some stuff this year.
I mean, a lot of it's inspired from, I'd say, Axia. If you guys know their content, they provide quite a bit of good content, I'd say, if you're a short-term, you know, S&P, NASDAQ type trader.
Mm-hmm.
A lot of it's inspired by them. this is all color coded to match their style, their coursework.
Okay.
So there's a million ways you can do it. I mean, I do use a few different types of footprints. But yeah, just to maybe bring this over, like, not this here, where is it? Like when I look at the DOM, and I was gonna ask you this too, is like, do you watch for correlation amongst other markets, right? Because when
No,
you see things going off in the bonds, the commodity like crude or something, or gold, watching the Russell, the Dow, NASDAQ and ES kind of, jumping around sort of together like they are now. So like I can see right now there's more heavy selling flow. And I'm watching these green and red numbers. They're telling me what's changing in the order book, and I can see if things are kind of jumping out of the way, because market makers tend to do funky things. And I can see it. I don't like to stare at the screen all day long. This is just going to wear out like your brain way too fast if you're not used to it. But yeah, so like this is really the three things. It's the auction theory based on your market profile, volume profile. And so yeah, as I've watched this while you've been talking here, I can see there's just been a stronger selling presence, right? Just by looking at these numbers for the S&P here.
So you're looking at number of what, asks or?
So this number here in the middle is how many came to market, so market sells specifically. And if we rotate back up, it would clear out these numbers. And so I can tell that the strength and the duration of this rotation is overall stronger than the buys. Like see how there's more orange numbers than blue? And they'll clear themselves out based on how I've defined those things, like how I want it to clear out. So you can change that,
Yeah,
like
yeah.
how it accumulates. But see, we're looking at the order book getting weaker and weaker consistently, and I can see like the the sellers, at least in the limit order book, like they're trying to get in front of each other. So this looks like it wants to keep running. And so I look for acceleration. I look for weakness or thinness in the book when there's, say, certain timed events like that you can plan for, like the CPI this morning, or Powell talking, anything like that. Everyone
Okay.
knows those things. But it's
So,
just,
sorry.
no, go ahead.
Are you saying like, you know how I said, for me, when we're pushing up into a level that looks really good, there's some confluence there with things I look at. Are you saying that if I was to look at the order book like this, I would have a better indication if that level was going to hold?
I would say I would think so, because I'll look at this only at the places where I want to look at this, right? So it's like I'll have an idea, I've got some stats, I've got some strategies, I know where I want to get long or short. But when we get there, I also define what kind of price action do I want to see? How do I want to see the order, flowing? Because
Okay.
there's a pace to it too, right? Like you can see when, let's say these four columns here, these are all the indices. On the right, I've got the UB. So that's just a 30-year ultra bond. And so if these four things on the left start like firing really fast, right? Like, and that's happening at the level I'm trying to get long, and they're just jumping up and they're just lifting the offers, and I can see the bonds starting to rotate down, right? Like that's more confluence to me at the price areas that I'm interested in. Like to watch this all day long is not going to really be anything but noise. Although, there are some professionals, this is all they look at. Good
Right.
for them. That's amazing. I can't. So it's just, yeah, if you look at that kind of stuff, this footprint is kind of the history of what I've watched on the DOM. And so it lets me understand like where's pocket buyers, where's pocket sellers. So like on a 30-minute time frame, like down here, there was someone standing on the bid. It's super dark red because market sellers came and it just got absorbed before rotating up, right? So you can see there's a
Okay,
large differential.
so you are using absorption.
Yeah, but on the broader time frame, like I was asking you, this is very concerning that we are ignoring weekly VPOC, the weekly distribution here in value, and the same goes for monthly. But although the one kind of divergence I do see is on a yearly time frame, we're starting to enter a discount zone, which is below value on a yearly time frame,
Okay.
right? So does that mean we accumulate more where all these guys were accumulating and getting long?
Hmm.
You know, maybe, but 99% of everything else I'm looking at says this is a great short.
Yeah, yeah,
But that's it.
yeah. I don't think I don't look at all this under the hood kind of stuff. So I'm looking at super basic technical analysis. But I would argue that we could probably come to a similar argument on key levels.
Oh,
Just
for
two
sure.
completely different things, which is super interesting to me. But
Yeah, no, everything you were saying, like I was looking at my levels on that I have on a different chart, and they're mostly the same. So it's if it works, right? We're all seeing
right,
the
right.
same numbers at the end of the day, just
Yeah.
represented differently.
No,
But
this is cool. This is kind of the next thing I want to get into, is just haven't kind of delved into it. So good stuff.
yeah, good books out there on it and everything. So
Yeah.
but yeah, I can stop sharing here.
I think there was somebody else that wanted to ask some questions. I thought there was.
Yeah, I was curious. How many ticks you typically go for when you're taking your trades?
How many ticks? So it's going to be different in each trade. So let me show you an example here. Let's just say theoretically I got short off 96, expecting to sell off again, just as an example, not saying there's a trade set up there, but if I got short up there, I said this earlier, I probably wouldn't have taken it. I want to get in somewhere where I know that if the level holds, it's going to push at least 5 points into the next expected level on the chart. So I don't know if that makes sense. For instance, if I got short here at the top end of this,
Are you sharing your screen? Because
oh, I'm not
it's
sharing.
not.
Let me get it up here. I thought it was sharing. Share screen. Wait, what the fuck? No, it's not letting me. There we go. Share screen, screen one. Yeah. All right, so just for argument's sake, let's say for whatever reason I wanted to get short over here. I mean, there's pretty nice little divergence there. Actually, there wasn't, but let's just say that there's a nice pullback here. I get short. I'm expecting potential support in the market somewhere around this right here. So if I'm short from up here, I want to make sure that I can take profit just in front of that level in case they come in and front run and bounce a tick or two in front of it. So I want to make sure I'm getting profit there. And then I have a few runners. So my general targets are around 5 points for that first fill, around 10 points for the second fill, around 15 points on the third fill. And I typically will take 2 off around 5, 6 points, 2 off around anywhere from 9 to 12 points. And again, it's going to be based on what the market is telling me.
You're taking 2 off each time. What are you starting with? 10
I start
contracts?
with 5. I take 2 off around 5 points, another 2 off around 10 points. The other one is just to go to 15. And it's not 15. It could be 12. It could be 17. Somewhere in that upper range from 10 to 20. And a lot of times it doesn't get to where I want it to get to. So that'll come back. And most of the time I just pretend it's a freebie, but sometimes I'll trail the stop, below a major expected support or resistance level, and try to capture a couple points on it if it doesn't end up going to my target.
You physically put stops in, or you just watch it?
Well, I have let me go to a sim account here. So let's see, what's the market doing here? I'll just buy the market. It has a stop loss at 2 points here. So it's already in. And then I have, again, static around 5, static around 10, and then that 15 up there. So that would be kind of like a full position for me. And then, I have another dome that has a single contract that has a bracket in it. And so if I'm in a trade and I've pulled some off, or I see something to add, I'll add an additional contract in. So let's say theoretically I got short off the high over here. Let me zoom in. It pulls back, it comes into VWAP, and I get a good signal there. I might add another contract for it to continue going. The problem that I have sometimes when I try to jump in and add is I end up getting stopped out on my ads. So a lot of times if I get in at a good entry, I just let it try to work out for the 5, 10, and 15. And then, like I said, if I get a nice big winner, or sometimes I'll get 2 really nice winners, or say 1 big one and 1 medium-sized winner, I'll just go down and scalp with a single contract for the rest of the morning, if I want to trade anymore, you know. So I don't like getting 2 big winners and then chopping myself up at the end of the day and losing it all. So I decided just go down to 1. I could take a couple stop losses and I'll have basically no effect on my P&L. You know, very minor.
What do you think about the MES?
Oh, the
micros?
MES is amazing. That's like a godsend to any new traders, because now you can actually get in the market, have some risk on, and you're not losing $20,000
Yeah.
a week.
I like to
Right.
trade that
So,
while I'm sleeping. I'll put the trades on.
right.
Play them for the whole day. Last week I made a 100-point trade.
Yep.
It's pretty, you can do it.
Yeah, you know,
There's
that's
some pretty
the thing I
wild stops
found.
too. You can be really loose on your
Yeah,
stops.
exactly. Yep. The micros, that's the thing. You could throw a whole bunch on and it's just like whatever. So yeah, you're riding the market for 100 points. You're not even worried about pullbacks. You're just like, whatever, let's see where it goes.
Right.
I actually, going back, let's see, where are we now? February. The end of last year, I was kind of doing that. I was like, why don't I just throw like 10 micros on? And that's not even a lot, right? There's people trading 30 or 40 full size ES contracts. But for me, you know, I'll throw 10 or 20 on, and it's just like, you just let them go. You end up making more than the full size contract. Right.
Hey, that's crazy.
So
Yeah, it's
that's
fun. I
also,
like
I
the
think
MES.
micros are great because when I started trading, there were no micros. So I basically was on a demo, and that's it basically.
Yeah, when I started trading I started on the regular ES, and it was
Yeah,
rough.
I lost.
uh,
I'm not a wealthy person, and I come from just a humble beginning. And I would say, what was it, the summer of 2018? One of the summers, like 3 or 4 years ago, I lost 10 grand in like a month, like of my own hard-earned, saved money. And I was decimated. I was like, holy
talk to my
shit.
buddy. He loses that in a day. Sometimes. Yeah,
Lost it in a day.
that's what I struggle with. When I'm down $200 even, I'm like, I gotta, my stops are too tight. They really are. I need to loosen it up. But
Yeah.
I really like how your numbers, your accuracy looks, it's pretty amazing. It's
Oh,
pretty good.
thanks.
Have you guys
I mean,
traded
it's
the other
no
micros?
secret. I mean, it's pretty straightforward stuff. But it obviously going to take time looking at the market and looking for these specific things, you know.
Been trading since how long?
What about 7 years? I don't know, 2015, 2016.
Okay.
That's when I started getting into actually crypto. That's what kind of got me into trading, was the whole crypto thing at kind of the going into 2016, all that kind of talk when it was on its huge bull run, you know, going into the end of 2017. And I remember I would listen to this group called the Whale Pool. Is anyone familiar with that?
I haven't heard of them.
So it was a what do you call it? TechSmith? What's the, no, not TechSmith. TeamSpeak. There's I don't know if anyone's familiar with TeamSpeak, but it's basically like a chat room where you can talk voice.
Yeah.
And so I would go in and literally listen to them trading all day and night. So like I would go to bed at night and I literally had them talking next to my bed, listening to them calling trades and seeing setups. So that's when I
How you
got my
learn, man.
start. What's that?
How you learn?
Yep. Yeah. So that's how I started learning, obviously YouTube and stuff like that. And then maybe 2 years into it, around 2018, I met Jason, and Jason basically was kind enough to let me just sit next to him at Starbucks every morning and just, be over his shoulder. And he kind of taught me a lot of stuff over like probably 6 months. Like literally every morning I'd go show up at Starbucks at around 5:45, 6 in the morning, and I'd be there till noon some days, and just staring at the charts. So
your typical trade is 5 contracts. It's $80,000 risk to make 250. Is that right?
I mean, it's generally, I look at it more in terms of points. So
Yeah.
if I can capture about 40 to 50 points and only risk maybe 10 points on a catastrophic stop, that's good enough for me. You know. So
Yeah, 50 points times 5. Well, not when you're stopping out. It's just margin.
you know, 50.
Yeah, that's all the questions I had so far.
Don't focus. I don't know. Who is this speaking?
Nate.
Hey, Nate. How long have you been trading?
Well, I started back in when I was 28.
Okay, so you're
43
experienced.
now, so
So you know the deal. The trading.
yeah, I haven't. There's years where I didn't trade at all and did more investing, but I'm no newcomer.
Yeah. No, I tell everyone, especially people who are newer, to forget about the money, which is,
Yeah,
I know
just
we're
go
here
for
to
the
make
points.
money,
Yeah, I
and
understand.
it's all money. But if that's the big thing, like if you take a trade and then you're just like, oh no, I'm down, like should I take the next trade? Now you're totally screwed up. Now you're emotionally trading.
Yeah.
So you have to keep your size small enough such that 3 or 4 losing trades in a row has no effect on your psychology. Now, I know there's an effect. I mean, you can't claim to have no emotion or no reaction to, an adverse event or a positive event,
Sure.
but it's recognizing that emotion
Yeah.
in real time.
I've
So
tested this on myself. When I've traded large positions, I'm noticeably nervous and I'll go, all right, and let me just trade one contract, and I couldn't give a crap, and I do better because my thought process is clear, my head's clear. It's amazing how much emotions affect our trading. So it's the biggest hurdle any trader, I think, has.
Yeah, that's the name of the game, is getting control of that, or at least it's not really control of your emotion, it's recognizing that it's coming up.
Yeah.
And realizing, okay, I need to stop for a second, right? Because there's times where, again, on a tick chart, you can get really, zoomed in and kind of captured by some of these small movements, and you forget to step out and look at the bigger picture. So
Sure.
I'm guilty of trying to get in something and then maybe trying to get on another one, and then I find myself going, and then you can't see my video of my face, but getting up close, looking at every little tick, trying to find an entry. And then I remind myself, whoa, what are you doing? Right? That I need to step back. I should not be trying to force an entry. In fact, I'm waiting for the market to come to a level that I want to trade off of. But I think all of us can get really caught up in the minutia, and you're really trying, or here's another one. The market, like this morning, if we go all the way back to 5:30 this morning, you can actually see my trade entries here. Proud to say I got long at 45.25 and here at 45.33 this morning. So I got some really nice trades off. I got a bunch of break evens here trying to get this level, but eventually worked. Anyway, I digress. So this morning, the market started ripping right off the news here. Where was we? We started pulling back, and then 5:30 hit, and this guy just started chugging down. In like 2 or 3 minutes, we sold off over 25 points. So in that instance, if you're watching and you're going, oh my God, I got to get in this, I need to be short. That's probably the last thing you
Sure.
want to do. Right?
Yep.
Because now you're
chasing.
trying to force something, you're chasing, and you're emotionally involved, and you need to make money or whatever it is. Instead of just going, oh, we got to break through a level, pull back, and a kiss of it and a failure, maybe I should try a short. Rather than thinking about it as trying to find a good trade, assuming that you get a good setup.
I was actually able to capture that whole move
Oh,
starting
really?
last night, but this morning just threw me for a loop, man.
Oh
And
man,
I didn't lose any money, but I lost 80% of that profit.
that's
Yeah.
That's why I say the most important thing is to mitigate loss. The winning trades are going to come. You're going to eventually catch a high or a low that goes 10, 20, 30, 40, 50, 100 points in your favor. So those are going to come. It's all about making sure you don't lose all that money that you just made.
Yeah.
And again,
Yep.
that's why you see most of my trades, I'm in, and then it comes back, I'm out. I'll just wait for a trade where it comes into my level, I get my divergence signal, I enter the trade, and that's it. All right.
I haven't used divergence yet. My buddy uses it at work, and yeah, it's interesting. I just haven't. I trade mostly off of levels.
Okay. I think you probably should just stick with levels. The more you start adding to the picture, the more it just becomes, keep it simple, right?
Yeah, sure.
I mean,
Yeah.
I've got a million things myself. So I'm guilty of maybe being a little too technical, but I'm also a super analytical guy. So I think, and no matter what I get into, it's going to be a little bit more involved.
Yeah.
So
I have everything except instead of your divergence, I use a standard deviation. I don't know if you heard of that.
never messed
I
with
use
that.
VWAP and I use moving averages.
Yeah,
Way too much.
that's really all you need. Look, I really don't need divergence if I just play my levels. If I just play level to level, I probably do maybe even better, because there's a lot of times where I'm looking for a divergence at a level. And again, like I said, sometimes I could get into that mode where I'm trying to find something and I'll get a couple stop outs and realize, wait, what am I doing? If I just played a level, I think my life would be a little bit easier.
Yeah.
But I think, when it comes down to it, we all have to find whatever works for us. And so far, this is what has worked for me.
It's just accuracy of wins.
What's that?
Oh, am I speaking? Yes. Oh, what's your accuracy of wins?
Like I said, I have like a 25 to 33% win rate. And of course, it's always going to be shifting a little bit, right?
How long do you stay in a trade?
There's no answer for that. I mean, I know that one of my newer mentors, Ephraim, he'll. Can you ask that question again?
How long do you stay in a trade?
For me, it doesn't matter. So my well, it's not really a mentor per se anymore, but I was kind of working with him for a while. And he said that if a trade does not work and go in his favor and it starts petering out and it's, say 5, 10, 15 minutes, he just closes it. But for me, I just let it go. And if it eventually gets to my targets, it gets there. If it doesn't and it comes back, I'm out at break even. So it's however long it takes to come back.
Okay.
Well, I mean, I don't know. Are you asking me how long my trades are?
Yeah, the time frame.
statistically,
Because
or
because
how long do I have like a cutoff time where I just stop trading?
yeah, like the time frame that when you enter a trade versus when you exit a trade,
your time frame, because it's like holding a trade long for me, longer than 15, 30 minutes. I get out, I get bored with it and get into another trade if that's moving.
Yeah, yeah.
And that's how I usually do it, because I'm looking at percent wins and green day versus red day. That's all I really care about.
Okay, yeah. Well, I don't really have a time frame as to when I'm going to close a trade, because there have been times where I get impatient, I close a trade, and then the next thing I know, I come back to the charts and we're all the way up past my target.
Yeah.
You know? So I'd rather just let it work out, and then if it comes back, then worst comes to worst, it'll take me out, you know, with a commission loss, right? But
What are your commissions on this platform?
what are we looking at? Just about $4 round trip.
Oh yeah, it's better than mine. TD, I use TD Merchant.
What do you?
$3.25
Okay.
one
yeah,
way.
One way. Well, TD is actually more expensive, if I recall. Don't you also have to have a larger account?
Mm,
I mean, Ninja and a lot of these brokers are, you know, here for all the retail traders, right? So super cheap commissions.
I don't think my account's not that large, it's less than 100 grand K, and I have full futures access.
Okay, yeah, I know that the margin requirements are definitely higher on TD Ameritrade. So if you move that account to Ninja, you could control probably maybe 10 times more contracts if you wanted to.
Oh wow.
Because TD Ameritrade, I think it's something like what, $6,000 per contract.
Oh wait, is it different on each platform? No, for the ES, it's 16,000. Yeah, 16.6K.
No, that's full CME margin.
Excuse me.
There's,
That's what I had to pay when I
yeah,
buy the contracts.
if you use AMP or something, like, I think it's 400 or 500 of, margin, not for overnight, like just intraday.
Yeah, it's
But
ridiculous.
it's nuts, yeah, like, you shouldn't do that.
No, Ninja
Really?
Trader is like what was it, $1,000 per contract? I don't even
Oh
know
my
anymore.
God.
I don't even know. But I know for the micro, you only need like $200 in the account to control a
The
few
micro
contracts.
is, yeah, cost me what, $1,600, I think. Or
Yeah, so the
$1,200.
margin requirements are much higher on TD Ameritrade.
That's crazy.
So he is doing you are doing 5 contracts at 16.6.
No, he just said
I'm sorry.
it cost him $1,000.
Okay, gotcha.
It's a
I was
double-edged
gonna say,
sword.
Jesus, if I had to do that, I'd be in 80 grand just to get 5 contracts.
That's why I was wondering. It's like, hey,
No, I couldn't do that.
you're risking way so much just to make $250.
I thought they were all the same. That's crazy. I didn't know that each platform had a different rate.
Yep. Well, they
Jesus.
want to sucker all the retail guys in and take all their money.
I don't know.
But yeah, that's a good point. I don't know who said it, but the last thing you want to do is be over leveraged. And again, it goes back to psychological capital, emotional capital. You shouldn't be risking much more than what, maybe half a percent or even less, in my opinion, on each trade. This doesn't make sense to me.
Yeah, that's why I started trading the micro, because even, yeah, that's crazy.
Yeah, I mean, it doesn't make any sense. And then with the micros, like you said, since you don't have much care, or that's probably not the best word for it, you have a little bit more looseness with it, right? So you can let things run. And I do think that with a nice sizable micro position, you could probably make more than you would with a smaller lot, smaller lot on the full size,
Sure.
because you do have that leeway. And then at the end of the day, if you took 5 or 10 losses in a row, it was less than 1% of your account.
Yeah.
That's what trading is all about, in my opinion. Living to fight another day, making sure that
Exactly.
you're giving away all your wins.
Yeah. There's always another day.
Yep.
There's not always another dollar, right? in Your account.
There's not always another 50 grand. So does anyone else want to jump in? We're getting to I need to run, but definitely a little bit of time if there's anyone else that wants to ask any questions or anything.
I'm Eastern Standard Time. I gotta go to sleep.
Yeah.
But,
Actually, I was gonna say, is this, let me take a look here. Where's my list? Is this Wes?
Yeah.
Okay, I was gonna say, I saw your screen and it said -2. And I'm like, where is this guy? This guy is not a Las Vegas guy.
No, but I'm very fond of Vegas. I'm a Canadian, and we would go for 2-3 weeks to kind of hang out with some family. It's my favorite place, basically, and I intend to buy a home there in the next 1 or 2 years. And
Oh shit,
spend
you're 5 years too late.
I know, I know.
You might want to wait a little bit.
It's okay.
Dude, I almost bought a house 6 years ago and I would have been up maybe 100% at this point.
Yeah.
Yeah, no,
know?
it's interesting real estate market. I've been following it for 3 or 4 years, so I just I love it. Even if it's up from what it was, it's still not too bad compared to other places. And yeah, man, I just love dry, sunny climates, and there's just so much there.
Yeah, no, I fell in love. I moved here from New York and never looked back. The weather on the East Coast sucks, and I wouldn't ask for anything different. It's great. It's 70 all week.
I'm so jealous.
I mean, I'm not really trying to rub it in, but
No, I know. If there weren't restrictions, I'd have gone the last 2 years, so I'm due. But thank you so much for the presentation today. I look
Oh,
forward to the
definitely.
next ones. And maybe one day we'll sit down and have a coffee or something in Vegas if I ever get to cross the border.
Yeah, come on down and let us know. And if I think it'd be cool if you're willing to maybe do a presentation. It doesn't have to be formal, just kind of like you did today, and just kind of go through maybe one part of auction theory or something.
Oh yeah, I could talk shop all day. This is my favorite thing to do. So
Yeah, same
happy
here.
to.
I
Sure.
could sit in this chair all day.
Yeah.
But yeah, perfect.
Well, thanks guys. Nice to meet you all, and we'll see you next time. Good night.
Later, Wes.
All right.
So just to finish it out, we will be back next week, but in person I believe we're meeting at Klaus's office. So we'll have our in-person general meeting next week, again, Thursday at 6 p.m. And then the week after is the Trader Expo, and I'll try to get something out so we can all formally meet somewhere at the Expo. So I'll try to get that out, and I think that's it. So
Where's the expo being held?
I believe Bally's.
It's free.
It's free, but if you want to get into the talks, I believe they charge you $150 if you want to actually, be in some of the presentations. So
You have to pre-register, or you can just walk up.
I think you can basically just go and walk around. There's no barrier to entry. So you can just go in, but you're not going to be able to go to the little exhibition halls and stuff without your pass.
Okay.
So you could still, actually show up and meet, but I don't know if you're going to be allowed access to the talks. It's it's stupid. 2 years ago it was, now 3 years ago, it was free in the past, all the way up until the last one they had. They started charging. So yeah, I mean, I put out that thing and it was 20% off. So you could have gotten a little discount on it, but.
Oh, I didn't see that.
And I actually found out that, so a guy contacted me and he's like, hey man, I'm with the Traders Expo and we'll give you guys a discount code and you can share it with your meetup group. And then after a little while, after talking with the guy, it turns out this guy's with like a trading company, and he's like, can you put this picture on your Meetup group? It was a picture of his company, Trade Station, or one of them. And I
Yeah.
just didn't even respond. I was like, really? So whoever gave me that code made money off of
Right.
anybody that signed up.
There's no links these days.
I was like, I thought, I was like, shit, I should have just contacted Traders Expo, told her I ran a Meetup group and got my own.
All right.
All right, so that's it, guys. Hopefully I'll see you all next week at the monthly meetup, the general meetup. And we'll be back a month from now for another futures meetup, and maybe Wes will present some market profile stuff. Anybody
Sounds
else
good.
want to chime in here before we take off? If not, I will see y'all next week, and if not next week, in a month for the next futures strategy meetup. See y'all then.
Thanks.
Thanks.
Later, guys. Hey, Brian, are you still in here? To Brian. Let's see if I can. Hey, Brian, can you hear me? Can you hear me? Well, I guess Brian.
Hey, can you hear me now?
Hey, I just curious, are you coming to Vegas on the 20th for
I'm
an
actually
expo?
No, I'm actually going for a wedding.
Oh, okay. All right. Because there's somebody else coming to town for an expo, the 20th to the 22nd. So I wasn't sure if you were going to the same thing. Okay.
Is there a trading expo going on then also? Or
No, it's a social media expo thing. So okay. Cool.
Yeah, but yeah, I'm up there. My son-in-law is getting married, so
Oh, nice.
for a few days.
Having a nice Vegas wedding.
Oh yeah.
Well, reach out. Maybe we'll meet up for something.
Yeah, definitely.
Awesome.
All right, man.
Okay, guys. Take care.
Talk to you later.